Fears over the economic growth still persist in the market. Investors are worried about the high inflation rate in the major economies. And this week, traders are looking ahead to the fresh data on consumer prices in the United States and the United Kingdom, where the outlook remains extremely negative. And this forces central banks to raise the rate more aggressively. Find out more about the state of the foreign exchange, crypto and commodities markets in our video review on InstaForex TV channel. On expectations of a more aggressive policy by the US Federal Reserve, the US dollar index, which measures its value against the basket of 6 major currencies, managed to reach the key level of 100 points. It's a 2-year high, but failed to consolidate there. As a result, the US dollar gained 1.22% last week. FOMC minutes released last Wednesday confirmed that the regulator is ready to raise the rate by 50 basis points at its next meeting and reduce its balance sheet starting in May. The ongoing tensions in Eastern Europe support the status of the greenback as a safe haven asset. Last week, the European Union and the United States agreed to impose a ban on coal imports from Russia. Investors are concerned that the European economy will also be hit by the anti-Russian sanctions. Business sentiment in the region has drastically worsened, while consumer prices are holding at their peak levels. Against this backdrop, the euro closed last week falling by 1.5% against the US dollar. Apart from the conflict in Ukraine, political uncertainty in France, the second largest economy in the Eurozone, also worried investors. There is a possibility that Emmanuel Macron may lose the current presidential election. As for the British pound, it has also slipped to the lowest levels against the dollar since November 2020. Unlike the Fed, the Bank of England does not intend to continue its rate hike. The regulator has already raised the rate 3 times by March to the pre-pandemic level. In the meantime, consumer prices in the country are holding at 30-year highs and will continue to rise according to forecasts. This may well be confirmed by the inflation report, which is due to be out this Wednesday. Last week, Bitcoin was again testing the resistance level of $43,000 per token. Bulls lost 7.5%, but they are not going to give up. Yet, analysts expect the #1 crypto asset to decline towards the area of $40,000. In the commodities market, oil lost its value at the end of the weekly session. Benchmark Brent crude was trading at just above $100 per barrel. The second week of decline came amid US plans to release oil from strategic petroleum reserves and worries of a lower demand in China due to the ongoing lockdown in Shanghai. The sanctions pressure also affects crude prices. Investors are closely watching the reaction of Western countries after the European Union has banned coal imports from Russia and is considering an embargo on oil, gas and nuclear fuel. These restrictions may help oil win back its early losses. In the meantime, gold keeps extending gains. In addition to tough sanctions against Russia, gold is appreciating thanks to the monetary tightening of the US Federal Reserve. The price of the precious metal stood at $1,947 per 3 ounce by the end of the week. You have watched Combined Review on InstaForex TV channel. I'm waiting for you with a new video in our channel. See you!